Hey, finance folk! Greetings and salutations. Welcome to the EU Finance Podcast. My name is Laidas Polobinskas, and I am your host. I was watching a movie the other evening, some sort of unmemorable international crime thriller, where the movie remakes international organizations and institutions into something that they're not. Think big, dark suited Interpol or Europol agents breaking down doors, shooting everything in sight, and arresting sinister crime lords. That's not how Interpol or Europol work, folks. I always find such inaccuracy mildly annoying. Anyway, the World Bank is an international institution that we often hear about in the world of international finance, but I couldn't find any movies where the World Bank takes center stage. So I figured the best way to learn about this is to go directly to the source. I've asked one of the World Bank's leaders, Anshula Kant, to enlighten us about the World Bank today. Anshula Kant is Managing Director and World Bank Group Chief Financial Officer. In this job, she is responsible for oversight of financial management, reporting, and risk management of the World Bank Group and the mobilization of IDA and other financial resources. Welcome to the podcast, Anshula.
Thank you, Idis. It's a pleasure to be here.
It's great to have you here. Let's jump right into it. First, softball question. What is the World Bank Group? Who owns it? And what is it trying to achieve? Is it world domination?
I hope not. We are an international financial institution. We were established way back in 1944. The membership comprises of 189 countries. So it's truly a global development institution. What is it about? We have 5 institutions in the World Bank Group. So you have International Bank for Reconstruction and Development, or the acronym IBRD, as it's better known. That supports middle-income countries in their development journeys through loans, guarantees, and technical advice and knowledge-based products. Then we have something called the International Development Association. And we are fond of our acronyms. It's called IDA. It supports the poorest and the lowest income countries. Most of the support is highly concessional, meaning we either give away grants to the most, debt-challenged countries. And our lending is very long-term, very concessional, pretty much, or quite often zero interest rate or very low interest rates. Then we have 2 arms, the International Finance Corporation, or IFC, and MIGA, which is the Multilateral Insurance Guarantee Agency. These 2 actually cater to the private sector. They finance the private sector. They also de-risk, or through instruments like political risk insurance guarantees, they facilitate private sector investment into developing markets. The 5th institution is something called ICSID, and I think what it stands for is International Center for Settlement of Investment Disputes. And it pretty much does what the name says. It helps in, settling international disputes, which may arise in cross-border investment situations.
And these are all institutions that are under the umbrella of the World Bank.
That's World Bank Group.
And
right.
you mentioned that there's 189 members.
Yes.
So those 189 members are the owners of the bank?
Yes, they are our shareholders.
Okay.
They are also our borrowers. In some ways, it's a cooperative.
Mm-hmm. Understood.
So, which is owned and operated by member countries.
You mentioned quite a bit of financing activity and financing instruments. How does your financing work?
So, to put it very simply.
I like simple.
Yeah, okay. So, our shareholders contribute capital. That's the starting point.
Mm-hmm.
So, since inception for IBRD, IFC, and MIGA, since 1944, our shareholders have paid in around $29 billion as paid-in capital. Then on the back of this, very widely dispersed, strong support from our shareholders and the actual money that has come in as capital, we access capital markets. We issue bonds in the capital markets to multiply that $29 billion into $1.6 trillion of support over the decades.
That's trillion with a T.
Trillion with a T. This is over the decades. It is interesting to share with you that we issue together. IBRD, IDA, and IFC issue about 70 to $80 billion worth of bonds every year in the international markets. And pretty much 1/3 of that would be coming from European investors. So we value that support that comes in from the private sector, and that allows us to multiply the shareholder capital, lend to our borrowing countries, who are also our members, by the way. And we charge them from IBRD very reasonable cost of funds, but it's enough for us to be financially sustainable. Meaning we pay for our own costs, we save some, which can go to add to our capital base, and we then, of course, multiply that impact many times over and lend to our client countries.
But just to clarify, you're in no way, shape, or form a for-profit group.
No. So we don't track the ROAs and the ROEs, return on asset or return on equity. No, our mission is development impact. Basically, two very clear missions: eradicate poverty and facilitate growth and development through sustainable practices in our client countries. And of course, as you do that, our focus is on building human capital through education and health services, helping clients build infrastructure in their countries, which could be energy, it could be digital, it could be, transport, etc.
You mentioned, I think it was 30% of the purchasers of World Bank bonds are European or thereabouts?
Thereabouts,
Okay.
1/3, yes.
Actually, frankly, to tell you, that doesn't surprise me, in the sense that Europeans are generally forward-looking, and the World Bank, working especially with economies that need to grow, that need to be developed, kind of jibes with the EU being the world's largest humanitarian aid donor around the world, et cetera, et cetera. So that brings me to bringing it closer to home, back to the EU. How does the World Bank Group work with the EU institutions and with EU countries?
So first of all, they own a large chunk of the shareholding in the World Bank Group. In IBRD, they would own about, the EU member states own about 23%. In IFC, it's as high as 26%. And for IDA, which is, very concessional and grant-based entity, we have a replenishment every 3 years, meaning we go to our donor countries to ask for resources to lend to the poorest countries. And there, the European member states have contributed as much as 36, 37%. So European countries or member states have had a key say, key voice in shaping the agenda and objectives and priorities of the World Bank Group. So that's where it all starts. And then, of course, we work through the European institutions. European Commission, for instance, is a key partner. I think the basic commonality comes from the fact that we have common objectives, shared goals, development, sustainable development. That's really important. So, for instance, European Commission would channelize their financial support through World Bank Group trust funds, which then go on towards building client capacity, other infrastructure, or other, priority areas for them. There are other ways we work together that we make, there's a lot of advisory and technical work that we do in helping client countries have better systems, better practices, better governance, better policies, better regulations, and we do all of this work together.
Okay, let's try to go a little more into detail. Could you talk about some of the major initiatives or focus areas of your work? Especially if you can bring it to where the EU and the World Bank are working together in those initiatives.
One recent initiative, if I may, and we launched this co-financing platform last year. It's more than a year now, to help understand what co-financing means. Co-financing basically means if there is a large project, we co-finance, meaning we would finance, EBRD could finance. So we co-finance projects and we work together. So we launched this co-financing platform 1.5 years ago. Both EBRD and EIB are members over there. We have members, KfW, we have AFD.
What's KfW?
It's the German Development Bank.
Oh, got it. Okay.
So, many of these European development institutions are members there so that we can work together to deliver more efficiently projects to client countries. It helps the beneficiary country because they don't have to talk in separate conversations with every institution. That is one way. And I think more importantly, the recent shift that we are seeing within the World Bank Group, that I saw as I'm meeting people during my meetings here in my current trip, but even in the past, we have a rejuvenated focus in some ways towards private capital mobilization. So, Idas, if I may, public sector resources are not enough to actually fulfill the development needs of emerging markets today. Neither of the donor or larger shareholder countries nor do the beneficiary countries have enough fiscal space to devote enough resources for that. So the fact is that there is a lot of money sitting or resources sitting with the private investors. The challenge is, how do you channelize these resources into emerging markets, which are perceived to be more risky? In some ways, they are more risky. So this I heard in every meeting I attended. I was in Copenhagen a couple of days ago, and since yesterday in Brussels. I think that is a big unifier and a common goal. How do we do that? The EC is trying to do it. We are trying to do it. And what are we trying to do? Basically, we have a lot of strength in our balance sheet. Should we suppose a project needs $500 million? Should we give it all from our balance sheet? We could do that. Or it would be smarter to actually give 50 million or 100 million from our balance sheet, in some ways mitigate the risks of that project through guarantees or equity positions, and then facilitate or mobilize private capital to come in with us and do the remaining 400 million. That way, it's a win-win situation for everyone. We maximize the acceleration that our own resources can do. And I've seen that European Union institutions are trying to do exactly the same. I think we are all thinking along those lines, how to maximize finance for development.
No, absolutely. And not just for development. I mean, in the Capital Markets Union, which we're
Yes.
building, we're always looking for ways of how to draw in people who are putting their money into essentially negative interest rate savings account and invest it in developing the EU economy more.
That's
so the same thing for international development. That makes an awful lot of sense. Let's switch gears for just a second. I'm sure that you've probably in your meetings heard that here in the EU, we're now in the throes of simplification, of trying to lower administrative burdens on especially the private sector, et cetera, et cetera. We're talking about becoming more agile. So what is the World Bank doing to become more agile and efficient?
Thanks for asking that question. We have been on an evolution journey, I would say, for the last couple of years, thinking exactly along these lines. How we try to change our own internal complexities is by putting the client at the center of everything we do. So every process that we are trying to change, every procedure that we are trying to improve, it is by thinking, will it work better for my customer? Will it work better for my client country? So for instance, let me give you an example. On an average, we used to take about 19 months for project approval end to end. Today, it is down by 5 months to 14 months. And we are working towards getting it down to 12 months on an average. Similarly, these resources, the 29 billion I mentioned to you, they are very scarce resources. They're very precious resources. From the finance side, we have worked diligently over the last 2 years to see how we can make that dollar or euro go further and, have a bigger capacity available from our own balance sheet. So we have tweaked our internal financial models, our internal risk appetite to do more with the same. We have created some innovative instruments whereby we can gather more financial support from key stakeholders. So as an example, for IBRD, we have been able to enhance our own financing capacity by $100 billion over 10 years. And this happened in the last couple of years. One other, I would say, facet of the World Bank Group is the knowledge aspect. So because we are present in 130 countries around the world, we have boots on the ground in these countries. There is a huge learning that happens as we do these projects in different parts of the world. So this research combined with this local knowledge that we acquire in different parts of the world, we try to bring this knowledge in support to our client countries in different parts of the world. If I can give you an example, our team learned in Vietnam, for instance, as you cultivate rice, it's a very methane intensive process. It emits methane, the process of cultivating rice. And there was a new innovative process that was devised in Vietnam together with the country authorities and our own teams. And then we are trying to replicate it in other parts of the world. So that is that knowledge aspect, technical assistance, advisory is a very powerful, I would say, offering that we have combined with the financing that we do. So we are trying to bring more efficiency to this knowledge part of it. It had over the years become very, I would say, intellectual, but to make it work for country programs, this is another area of improvement that we are working on. So it's about efficiencies in our processes, it's about delivery to the clients. And I mentioned that co-financing platform that actually also leads to ease of doing business for the client. If we can all come together as financiers to as a single offering to the client. So there are multiple things we are doing in these areas.
Understood. I want to come back on to mobilizing capital for development. And I'm not sure you touched on the answer to this question already, but I think I want to go into a little bit more detail, especially because the president of the World Bank, Ajay Banga, has said that the World Bank can't do this alone, which you've already mentioned. I don't know if he said this, but I'm sure he also means that he can't do it with just the owners, the members, providing their input as well monetarily, but that you need the private sector.
Yes.
Now, the question is how are you mobilizing that capital, private sector capital for development? For example, I like to invest, when I have money left over after my paycheck is spent, if I have some, I put it in investment funds for the kids. Does the World Bank have bonds that are available to retail investors, or is there anything like that where private capital, not just institutional capital, can invest in the World Bank? Because obviously it's doing great things, it's doing nice things, and I'm sure that there probably would be people who would want to invest in that directly as individuals. Is there a possibility?
So there is actually. It's interesting that you asked, but we've done not too many of those. But in Italy, for instance, in Japan, for instance, we have in the past, from time to time, issued bonds which are focused on the retail investor. Of course, through it's possibly not a direct investment by a retail investor through some vehicles like mutual funds, etc.
Yeah,
but
sure,
yes,
ETFs or whatever.
yeah. So we do have that. But to talk a little bit more about how we are trying to mobilize private capital to come along with us, we've done that for a long time. It's nothing new. For instance, last year, the World Bank Group mobilized $66 billion of private capital. It's not small change, but our ambitions are much bigger. So what are we trying to do? I mentioned that, mostly what we do is we make a loan, and that loan sits on our balance sheet for 20 years, 15 years, for a long time. What we are trying to do now is, can we make a loan? And, once the development phase of that loan is over, typically a project comes on stream in the first 4 or 5 years. And after that, there is no reason for it to sit on our balance sheet. So can we distribute it out to investors who understand these markets, but they feel they are too risky? So you have to reduce the risk, bring down the risk, or in some ways match the risk return expectations of these investors. And how do we do that? We do that through instruments like guarantees, where we cover certain risk. For instance, our MIGA, the insurance arm I mentioned, has this instrument called political risk insurance. So through a MIGA guarantee, you can de-risk that investment into an emerging market country by, taking away the political risk, taking away the risk that this government may not repatriate the proceeds out or allow the investor to take the money out. So there are many instruments that we employ and can deploy more effectively. We've not done as effectively in the past. We want to do that more effectively.
Sure, that makes absolute sense, because one of the main reasons, I think, correct me if I'm wrong, that especially Western investors don't go into developing markets to invest private capital is because they're worried about, or simply don't know about, or aren't well versed enough about the local politics or the local risks. And they just say, whoa, it's going to be too risky. I don't want to touch that. So that sort of political risk insurance seems like a good way forward for the less knowledgeable investors to say, oh, well, the risk is covered.
And just to add to that, our bread and butter business actually of IBRD and IDA particularly is to work with governments, supporting them in improving their policies, improving their regulations, improving their frameworks of governance and transparency. Because one of the things we heard, we have this private sector investment lab. What does it do? We created this in 2023, and it comprises of 15 global CEOs, and we formed this group to actually advise us what are the barriers that hold back investment into these markets. And one of the key things that they gave us feedback on was that there is no certainty to the policies, there is no certainty to the regulations. Unless you have that certainty, it's difficult to make those investment decisions. So this is actually our bread and butter business from IBRD and IDA. We work with governments because we are there, we are on the ground, we have a very good connect with them. And we work with them to put down policies, regulations, and frameworks which actually enable even the domestic private capital to flourish, but also cross-border private investment into these countries.
Understood. Now, constant listeners of the podcast will know that I'm not a hard-hitting journalist, but I love to play one on TV. So my last question is going to be slightly provocative. Actually, it might be really provocative. It depends on what the
I
answer.
promise not to get provoked.
Okay.
Yeah.
Okay. Why should the EU institutions work with the World Bank when we've already got development institutions of our own? I mean, you had mentioned I think the German Development
Yeah,
Bank.
yes.
I think my home country, Lithuania, has, obviously not as big as Germany's, but I'm sure we have some sort of development institution as well. And I'm sure probably all the member states have one that in one form or another. Why should we cooperate with you instead of just doing it on our own or one by one?
I think the basic fundamental reason is that we have common objectives and goals. We want poverty to be eradicated. We want sustainable development. We want to create jobs in these countries domestically so that the young people who are growing up there are well educated enough, are healthy enough to be able to, and skilled enough for the jobs in their countries. So it reduces a lot of pressure in terms of people looking from emerging markets looking for jobs in developed world. That is one aspect of it. The other aspect is that without a job, without a decent job, you cannot think of growth or eradicating poverty. It was interesting to see under the Global Gateway. I guess you would have heard this term. It's a EU initiative, the Global Gateway Initiative. Under that, they have renewable energy for Africa. That's one of their key initiatives. And at the World Bank Group, we have something called Mission 300. What does this Mission 300 mean? It means, today you would be interested to know there are about 600 to 700 million people in Africa who have no access to electricity. This podcast we are doing and the lights we are seeing, they don't have any of this.
Which makes it impossible for them to participate in the modern economy, obviously.
Exactly.
No phones, no
growth,
nothing.
jobs, education, health, everything depends on that. So this Mission 300 is our project, which is we promise to deliver access to electricity for 300 million people in Africa by 2030. We are doing this together with other partners like African Development Bank and many of these European institutions we talked about. But if you see the overlap between this and the access to renewable energy in Africa under the Global Gateway, they are very much aligned. And you mentioned our president, President Banga and President Ursula met in March, as late in March this year, and they agreed that we could align our efforts and our, the projects and our deployment of our resources under these two initiatives because they are very aligned. Having said that, I would say the EU institutions and the World Bank Group, we all bring to the table our own comparative advantages. So the EU institutions have a great insight and expertise in the regional area. We have I guess, because we are very widespread, like I said, we are present in 130 countries. And we have boots on the ground. We've been there forever. So we have great connects with the local governments there. So our expertise in the local space, our expertise and connect with the local government authorities, it's a win-win situation if we work together, using each other's strengths or unique strengths and working together to deliver a sum or a whole which is greater than the parts. And I can give you an example of a project I remember IFC did with EBRD. This was to provide support in excess of $400 million to telecom companies in Ukraine. And we know there is a conflict situation, a war situation there. It's important to keep the connectivity going and, people in Ukraine having access to internet. And these projects were partially underwritten by guarantee from the EC. So if you think about it, EBRD and IFC combining forces together, partially underwritten by EC, to deliver a very valuable project in Ukraine. This is the power of collaboration together.
Well, it sounds like it's a symbiotic relationship.
I think so.
And
yes.
when, as you mentioned earlier, that when we help countries develop more, when we give people the tools to participate in the modern economy, then they don't have to think about migration. They don't have to think about running from their country. They can think about building their country. And I think that's what the EU, and it sounds like what the World Bank is concentrating on, is helping people get out of poverty rather than running away from poverty.
Yes, we believe forced migration is not good for anybody. Mm-hmm. There is a difference, and we've sort of focusing more, not exclusively on these sectors, but we've picked a few sectors which can generate more and better jobs in these countries. And clearly, one of them is energy and infrastructure. Another one is agribusiness, agriculture-based business, and health services. So that serves a dual purpose. You provide better health services to the people of these countries, but it also in the process creates a lot of jobs. Then there are other things like manufacturing. So local manufacturing, adding the value to commodities within these countries rather than just exporting the commodities. So you create jobs, you add value, you have a GDP growth that's happening there. Tourism and hospitality could be another. Again, these are not jobs which can be outsourced out of the country. They have to be performed by the people in that country. And a job, if you think about it, it's not just a source of income for anybody. If you think of your kids or yourself not having a job, it's a life which is without dignity, without any quality of life or security. So I think for mental and physical well-being, a job for the young people is absolutely essential. And let me share one statistic with you. As per our assessment, 1.2 billion people will be added, young people will be added to the workforce in emerging markets over the next decade. And if we don't change the pace of job creation, we may end up with only 400 additional new jobs in the next 10 years for these people. And what happens to the remaining 800 million people? So it will not be a demographic dividend for these countries if we are not able to do something about finding good opportunities in their countries for these people.
Well, it sounds like the World Bank and the EU are looking for ways to help with those opportunities. So it's good to have allies and like-minded friends
Yes.
working towards the same goal. Anshula, thank you so much for coming and educating me about the World Bank Group. I found it very interesting and I learned an awful lot. So thank you for coming to the pod.
And thanks for inviting me. It's a pleasure to be here in Brussels. I just thank you.
Okay, here's my take on this. The World Bank is an international financial institution dedicated to reducing poverty and fostering sustainable development by providing loans, grants, and technical assistance to developing countries for infrastructure, education, health, and environmental projects. The EU collaborates with the World Bank to align global development goals with EU policies, particularly in areas like climate action, poverty reduction, and sustainable growth. This partnership involves the EU contributing funding to the World Bank's initiatives, leveraging the institution's expertise to implement projects in developing regions, and coordinating strategies to address challenges such as climate change and inequality. By aligning our efforts with frameworks like Sustainable Development Goals, SDGs, the EU and the World Bank amplify the impact of development finance, ensuring resources are effectively directed towards transformative, large-scale projects in the Global South, often in tandem with the EU's own development programs. That's all for today. Please check the show notes for links to more information. Please like and subscribe to the pod. Leave a pleasant comment on whatever platform you listen to us or watch us on. Spread the word. And until next time, bye.